Welcome to this video. Today we talk about role of various parties in international trade. Let us try to understand the role of parties using a case study. Suppose we are talking about export of electric vehicle battery components from Mexico to US. The background is that maybe we are in 2025 and amid US protectionist policies and a push for sustainable technology, the Mexican manufacturer Baterías Avanzadas is securing a contract to supply lithium-ion battery components to US-based EV producer, maybe GreenDrive Motors. They are based in Michigan. The deal is valued at $10 million. Delivery is scheduled for April 25, and the transaction reflects Mexico's growing role as a top US trading partner, driven by new shoring under the US-Mexico-Canada arrangement. Now, exporter is Baterías. Their role is as a seller and producer of the EV battery components. Their responsibility is to produce high quality lithium-ion cells and supply to the Michigan entity that should be in compliance with the US safety and environment standards, that is called as a UL certification. They have to arrange for documents that proves that export is valid, import is valid. The commercial documents can be commercial invoice, packing list, certificate of origin, etc. Certificate of origin should be in compliance with the USMCA, United States, Mexico, Canada agreement. Then in this context, the role of the exporter is that the party is based in Monterrey, and because of that they are getting the benefits of Mexico's proximity to the US, that is lower labor cost, and they are able to capitalize on the shift of the global chain from China because of the nearshoring policies and the anti-China policies of the US government. Now let us look at what happens, or what is the context of the importer. Importer is GreenDrive Motors. They are in US. They are the buyer and end user of the components because they manufacture electric vehicles. Now they place an order and then they pay for the goods through a letter of credit, and they are expecting to ensure the letter of credit to help them to comply with US import regulation regarding the customs clearance and other applicable duties. The context is that there are US tariffs on Chinese imports, so they are getting it from Mexico to take advantage of the US-Mexico-Canada agreement. There are also potential for broader tariffs and duties. So the GreenDrive opts for a situation that the Mexican supplier will be able to mitigate those costs and risks and leverage the USMCA free trade agreements. Now these are the responsibilities of these two parties. Now comes the freight forwarder. For example, Logistica Global is a freight forwarder. They work in the Mexico-US corridor. What is their role? As a coordinator for handling the transportation of these goods. They are responsible for arranging cross-border trucking from Montreal to Detroit. They have to manage the shipping documents, for example, bill of lading or a truck receipt or whatever is required, and then they have to coordinate with the customs broker on both sides, on the US side and the Mexico side. There is a rising cost of shipping that is happening, so they have to manage in a fashion that the customer is also happy and they also have a margin. And then the Panama Canal disruption is one of the challenge between the Mexico shipment to the US mainland. This has made land transport more competitive, but fuel price is a concern when you look at land transport. Then we will turn our attention to the customs authorities as another party who plays an important role in an international trade. What is the role of customs parties? The customs authority, there is a US Customs Service, USCS, and there is a Mexican Customs Service, SAT. They are the government agencies who oversee the border control. What is their responsibility? US Customs inspects a shipment. They will verify whether it is eligible for USMCA tariff, that is no tariff on Mexican goods, preferential treatment, or whether these goods are, though coming from Mexico, not eligible. That decision US Customs will take. They will enforce 25% tariff on non-qualifying steel or aluminium inputs. Right? That is a new tariff that the government had announced against non-preferential treatment countries. What is SAT, the Mexican Customs, doing? They have to ensure that their goods that goes out are in compliance with the USMCA. They will inspect the shipment and they have to ensure that there is proper documentation and they are not claiming any extra rebate, because Mexico has an IMPEX program where if you ship to certain countries, if you ship certain goods, you get a concession. So whether the tax rebate has been rightly or wrongly claimed, that check will be done by the SAT. So the exporter has to ensure these documents are properly submitted to them. One side there is a US protectionism, and this leads to scrutiny, but at the same time USMCA has a streamlined process for cross-border trade between these two countries. Now let us look at what are the roles banks will play in this transaction. Now banks are financial intermediaries. They facilitate payment, they issue the LC, they confirm the LC, they handle the documents under the letter of credit, they ensure and confirm whether it is compliant or not, and if compliant they will pay and take the responsibility. All these roles banks play. For example, Banorte from Mexico and Bank of America from US are the bankers who are participating in this transaction. Banorte as a Mexican bank will issue the letter of credit on behalf of GreenDrive guaranteeing payment. 2. Baterías Avanzadas. Baterías Avanzadas is a beneficiary or exporter, and their banker will receive this LC, process the documents. Bank of America will process the payment in US dollars because they manage the dollar currency. They also ensure that the anti-money laundering rules, trade-based money laundering rules, all those are complied when the payment information is passing through their books. A stronger dollar increases the cost of Mexican exporters, but secures payment against and mitigates the risk. Now let us turn our attention to the next important role a party plays in the cross-border trade. It is an insurance provider. What is the insurance company doing? They provide insurance against a shipment, against loss or damage. Maybe not only theft, pilferage clause, not only war clause, they provide all-round insurance for these goods, whether by sea or by road for the transit. What is their responsibility? They will provide cargo insurance covering the full shipment during the transit, and mostly it will be warehouse to warehouse cover. And the context is the current geopolitical risk, because there are delays and denials and damages during the border issues that are there, and then comes the climate disruptions. On extreme it could be flooding also, and these goods are battery components for the electric vehicles, so they are critical because of the value of the goods. These are the various parties different people are playing. Also, the agency in Mexico will issue a certificate of origin saying what percentage of the goods are coming from Mexico itself, and so qualifies as a Mexican goods. So what is necessary now? Now these are the different roles different parties play. We have to find out how we can have a trade agreement within the framework to make it better. There is a USMCA secretariat. There is a USMCA secretariat. The USMCA secretariat is the agency that ensures that the goods from Mexico to US will be in compliance with the free trade agreement to get the benefits for both the parties. They oversee the governance of this agreement. They ensure transaction adheres to these rules of origin. For example, 62.5% has to be the local content from Mexico to be eligible for the duty-free import into US. 62.5% if it is for automotive parts. This is for free trade. So the context is US is threatening non-USMA partners that the tariff will be more. US is saying that the agreement incentivizes only Canada and Mexico because it's a US-Canada-Mexico agreement. So the benefit for Mexico will be over other suppliers like China or India is that if USMCA secretariat can be satisfied that 62% are Mexican origin, then it's a free trade eligible goods. Then comes a third party certifier. Who is a third party certifier? The third party certifier is Intertech. What they will do, they will inspect the quality and they will assure that the goods are as per the specifications required. They will test, they will certify. This is required because US environment has certain regulatory requirements and safety standards, and so this entity will issue a certificate or a report that will meet the requirements to clear the goods into the US, saying this is environment friendly from their angle. So GreenTech has to meet this demand because of a validation requirement to ensure the compliance with the local regulation. Now let us look at how the transaction will flow. GreenDrive Motor will order the component. They will say it is a free on board shipment, and then Baterías will have to arrange the goods. Banurat Bank issues a letter of credit. It will be secured by Bank of America. Baterías will produce the component, get it certified by Intertech, prepare the export documents which can be shown to the USMCA Secretariat, and then hand over the goods to Logistica Global for trucking to Monterrey. The Mexican SAT clears the goods. US Customs verifies the USMCA compliance and releases a shipment. The goods arrive in Detroit. GreenDrive pays via the letter of credit, completing the transaction using the Bank of America channels. So this is how in an international trade multiple parties come together for the various management of the risk and ensuring the goods are moving as expected so that the payment will come on time. The shipment is delivered on time. There is no tariff, so there is a saving. There is a strengthening of the relationship and trade ties between these two countries. But the rising logistic costs and the uncertainty in the US policy, all these are ones that prompt the companies to explore long-term contracts for the stability. Here, there is a diverse different parties with a different interests and different capabilities and different expectations who are involved in this transaction to navigate a dynamic trade environment shaped by policy, proximity, or technology. Thanks for watching this video. We will come up again with another short session.